Good morning, everybody. Happy Wednesday. We have a pretty busy sesh today. FOMC earnings all coming out today. Market's been just steady little grinds to the upside. Gold and silver up again today, but not quite at all-time highs. We'll take a look at that this morning. All right, screen share coming at you. Chat for everybody. Let's get after it. All right. Morning, Michael. Number one in the house today. Roy, good afternoon. Good morning. Snapper, good morning. Tom is here. Jeff is here. Bill's here. Kathy, what's happening? Andy, good morning. Good morning. Good morning. Greg, Maria. Hey, Kurt. Hey, William. Dan's in the house. Lester is here. Steve, good morning. Don, good morning. Nice to see everybody. What's happening? Tony. Hey, Doris. All right, chat's open for everybody, so feel free to use it. Yesterday, just a little recap, we ended up grabbing a winner on daily profit play, ended up grabbing a net winner on double ups. Things are still looking great for engineered options for two trades to close out for winners on Friday. Probabilities are quite high. Yes, there's volatility ahead. Expiration on Friday, end of month. I'm excited to get another trade out next week, as well as start a new monthly trade. Regardless of what the month gives us, I do have my reservations about where I think the markets can go these next like 30 to 60 days with this kind of rising wedge type look, like the rising wedge type look. We did poke these highs on the SPX. Futures is pointed higher. We did close for some fresh highs again yesterday on the opening bell, closing bell SPX. You can see that tiny little close. What is the close right there? 6978, close 6977, close 6963. So officially closing at a new high, poking new highs. Not a lot of oomph behind it, but we also have, interestingly enough, a gap right here, a gap right here, and a gap right here. So if there's any market inefficiency, perhaps this gets filled, but I'm also not holding my breath. If I don't know, we're about to realize that things are just better to the upside, don't fight it. But I've expressed my hesitation. I'm not bearish. I'm just expressing that, for me to get more aggressive and deploy more capital, it's really, let's see where we get some pullbacks if they happen. If we break through these levels, then I'm looking for this structure to give us some type of, support. Just giving us, just trader levels. It's like, I don't want to just keep buying all-time highs. It's my least favorite thing. But there are ways we can participate and make money every single day too, and every week and every month. VIX up a little bit today. I mentioned this yesterday. I was in the closing playbook with Nate. I had mentioned the one thing that is kind of standing out like a sore thumb right now is the fact that we have XAUUSD, so gold, with another, strong day to the upside. And this is the biggest percentage away that I have seen at this bar count from this high to the 200-day moving average, 27.35% away. That is bigger than the run that we saw back in the capitulation move from 2009 to 2011. We reached just over 600 bars. We were 21%. So we're 27% right now. So again, I'm happy I'm participating. At some point, this is going to be a magnet. At some point, we're going to put a top in. There's going to be some type of, push and pull, cause and effect in the market where if gold snaps back, I mean, is that a bottom in the dollar? If gold snaps back, is that volatility in the bond market? That's 36% gold just since the dip in October. I guess if you want to go to Liberation Day to now, gold would be up 78%. You compare gold versus SPY, Gold is the winner. You look at this on a bigger time frame. I mean, since the great financial crisis, the S&P was much more valuable, but gold is quickly gaining traction. And be kind of embarrassing to see just gold just do this and just be the most valuable store of value, in the land. And if we're seeing a weaker dollar right now, it's like, who cares if the S&P is up 10% if we're losing purchasing power by 10 plus percent? That's kind of the trick. But all the more reason that it kind of forces us to be in the financial markets because we have to participate with the potential loss of purchasing power and debasement. So anyway, let's do some math from yesterday. Volume has been less and less the last 4 trading days. I know something that I mentioned this yesterday. I am a little concerned that the VIX is about to give us some type of event. So trading volume has been light. VIX has been low. Even with the spike up, and we had that little tiny spike on the VIX up to like 21. And I did sell some premium. And fortunately, I took advantage of a nice little, $1,000 opportunity in the SPY and the Qs, SPY in the Dow, SPY in the Russell. I sold a bunch of premium on the indexes using those April 2025 lows. We did that in Project Options Edge, but if we're about to have a VIX event, the one thing we did do for crash insurance is we have a synthetic long with the 17s. So if we see a spike into 30 plus, we should be up a couple $1,000 on that trade. We have an expiration into April. I don't know. I just feel like this is almost manipulated if we're not going to see some type of VIX event, like getting like I'm all for like the 15s to 19s, the 15s to 20s, like that's pretty contained. The market can grind higher, but when it seems like the whole world is screaming, we got to have more gold, right? And silver is 2 to 3 times that, and we've got to have more silver. There's price insensitivity to silver. Like silver could be $1,000, and it's not really going to matter because it's just a tiny fraction of everything it's needed for. But my gosh, would it be crazy to see these prices just continue to rip? Meanwhile, the S&P and the VIX is like, everything's fine. What's everyone creeping, going crazy about? Everything's fine. I don't know. At some point, it seems like, is it fine? Because if you go to the MOVE index, this also, same thing with the bond market. How are we going lower? Bond volatility decreasing. VIX is suppressed. Meanwhile, the dollar's had, 2 terrible weeks. Look at the velocity. It's like we're talking dollar type moves. These couple of weeks here when it was, one of the worst starts in 50 years, we're kind of doing the same thing. Now, that being said, am I super bearish on the dollar? No. I was bearish on the dollar when all this started. Okay, you see this pocket here? That was where I said, let's be short the dollar. And what was my measure move? To there. High, low, lower high, lower low. Symmetry hit. Excellent trade. My dollar weakness is done. If there's another wave coming, okay, fine. We get down here, dollar gets stronger at 90. If we get to the 90 handle, I would be between 90 and 86. I'd be buying the dollar. Does that mean I want to force a trade right now? No, because if this is a swing, this is a flat pattern, we still have a pullback towards 100 or 101 in the cards. So I could see this being a fake out type trade, right? Another reason that if I'm right about that, let's say this is a fake out trade and this just grabs liquidity at the bottom and then goes back up. Guess how gold corrects? Somehow the dollar getting a nod to the upside, and that maybe starts a correction in gold and silver, right? We'll see. But a dollar up move is possibly seen as risk off. And in the currency world, yesterday was all Swiss on top, dollar on the bottom. Today is CAD and dollar on top, Swiss and euro on the bottom. Decent amount of volatility, not a ton, but volatility. But no like outlier moves. And if I look at the yen basket, there's only a couple yen pairs that are showing like, oh man, look at the yen. It's the dollar weakness, right? This is down over 600 pips, and it's all because of the dollar. For the most part, the yen is making a bit of a move, but not a ton. Like that's Aussie yen. That doesn't look nearly the same. So the Japanese yen basket trades very much hand in hand. And the Japanese yen is making a correlated move, which it is not, right? Aussie barely moving. CAD, okay, a little bit, but a fraction of the move. Swiss, not even close. Not even close to rolling over. Euro yen, not even close. Pound yen, not even close. New Zealand yen, not even close, right? So this dollar yen, which is unfortunately how the Japanese yen futures is priced, it's all based on the dollar yen movement. So it's hard. I mean, somebody that's traded currencies for a lot of years, it's hard to look at the Japanese yen like this and say the yen's getting stronger. It's not. It's the dollar getting weaker. And I talked about this a lot last year when it came to like, big currency preparations and forecasts. If I'm going to trade the Japanese yen, I want to see that the Japanese yen across the basket is doing the same thing. This is not the basket. This is the dollar. So the dollar is making the move. So if you take a look at the dollar crosses, Aussie dollar, what's weaker? The dollar's getting weaker, so the Aussie's been great. This is a trade that I had going back to 69.50. We got there. But this trade has been brutally slow. This is Liberation Day last year, really strong support. It's a 700 pip move. We finally got there. Euro dollar. We poke new highs. We're at 2,100. Pound dollar. We poke fresh highs. New Zealand dollar. We're making our way up. I've got this thing going towards 63.50. We probably get there. I think New Zealand dollar looks pretty good, actually. Dollar CAD. Breaking back down to fresh lows. I see this thing going to 3,200. Dollar Swiss. Some fresh lows. This is going to be an interesting turning point. If gold turns, I can see the dollar Swiss giving us a bottoming position. Otherwise, look left, and we have this major flash crash down here in 2011. That was Swiss intervention, by the way. So could I see us, unraveling to like low 700s or 7,000s? Sure, maybe. But it's all been dollar driven. Yep. So I can see the currency markets getting a little bit more exciting, a little bit more volatile this year, based on some big basket moves, and dollar is kind of initiating that. I also think that right now, you're looking at one of the bigger changes in monetary policy, because you have this kind of bell curve, and you have the Bank of Japan that's been raising rates, likely still going to raise rates. Every other central bank has been cutting rates. And the dollar's been like the last to do it, but they are still cutting, right? I mean, we've cut 175 basis points, and likely this year still forecasting like 1 to 2 cuts by the end of the year. Meanwhile, inflation has fallen off a cliff. And I do like this reading. It's like, I don't care what government CPI data we have. It's like that's going to come out once a month, but I think this is a better indication of where things are going. There's like, I don't know, there's tons of data points with Truflation, and this to me is a little bit more real time. Now, I don't know how or why we've gone from a 2.7 reading to now 1.16. And I don't know if that's just reflecting, like, do we have a slowdown? I mean, there's layoffs being announced, but it's like 1.16. It's crazy. But that's good, and that still gives the Fed room to really cut if they're paying attention to this stuff. But meanwhile, our headline CPI is still printing at like 2.7, right? Here's your BLS reported rate at 2.7. So, I mean, if there's room for that to drop, great. We can see improvements in inflation. We can see the stock market continue to run a little bit higher. And to me right now, it's like, even with any type of noise and volatility, everything still points to assets going higher. I think we if anything this year, we have to block out the noise, stay the course, stick to our strategies. If there's a fake out here and we fall back, that's fine. It's not a big deal, right? We fall here, we find our key support levels, and then we find our levels to start participating. But we'll have strategies to help us survive. Okay, good stuff. Yesterday, double ups. Let me bring up so we have some gamma levels today. You can see that we are, look at this thing. This is just positive gamma. This is nuts, man. This is FOMC. And this market's just like lined up for order flows. Now, this is probably 0 DTE. Unless we are going to have a move this morning to front run FOMC, getting to that 7,000 handle. I mean, we're going to gap a little bit higher with a 0.16, but not enough to just push us right to 7,000. If we stay above 69.70, positive gamma towards 7,000. So one thing that happens on FOMC days is we don't typically take a standard daily profit play. Reason why is we can take the trade this morning and the market can go dead sideways until 2 p.m. today, and you're not going to make any money. And that's really frustrating. So it's not a typical standard daily profit play type event where we can be in and out of the trade within, 90 minutes or so. What this looks like to me right now is that the market is just with the flows pushing higher. 7,000 seems gettable. Maybe the best trade this morning would be a quick bull put spread and see if you can just grab a couple bucks and get paid on that directional move. Again, I don't know if we're going to have any direction. I would assume that if the market wants to kind of front run this stuff, then yes, we move to 7,000 and then we have maybe some volatility this afternoon. There's no rate cut expected. It's supposed to be a pause by the Fed, but look at that. Look at how wide this thing is. I mean, there's literally nothing to the downside, but if there is, it's 6,900. If there is to the upside, it's 7060. Are you freaking kidding me, man? Like that is way up there. That's way down there. And what's our plus minus on the day? Probably not, 30. With FOMC, it's like we're going to see it reflected in today's plus or minus. What's our plus minus on the day? 31.47, Larry? Jeez, that's so low. That's so low for an FOMC day. So unless FOMC is a complete nothing burger today, we'll measure it. I'll put my levels in, but I do not feel comfortable saying that that's the top, that's the bottom after a 31-point move. Not an FOMC day. Net, yes. But anyway. All right. We're off to a good start. Hitting some fresh highs in the portfolio this morning. That's nice. Plus or minus on SPX for today. 31.47, like Larry said. Yep. So 31. All right. So FOMC 31.47. Measure that out. Yesterday for double ups, let's have a look at our real-time gamma. So it took 3 trades. I didn't take 3 trades, but I put 3 trades on. And yesterday, let's go here. So yesterday's price, I'll box it in. This is yesterday's price action. Okay, so we had a trap up here from 60, 80 to 70, 20. So which is quite a bit up here. We had a trap up here. So I closed out for $7. This profit trap was trading for as much as $8.50. And we took the trade for $2.90. So that is what? $560. So $560 a profit offered there. But interestingly enough, the settlement at 78, if you remember, we had a 69.75 by 85 by 65, and that would have cash settled at 78 and change, which would have been a winner about $430. So how do I get that math? Well, that trade was a $2 debit. And so we had a $10 winner minus the 358 because it's just off of my perfect center price by $3.58. So that brings us down to $642 winner minus the debit of $2. So $442. Now, to be fair, if we let this thing go all the way to the end of the day, we win 442, and then we would have lost the full 290 and then lost the full 225. I'd be down 73 cents in the day. So the way that I put those trades in yesterday for double ups, if we did not manage the trade throughout the day, it would have settled to be a, small loss net. So unfortunately, like it wasn't perfect at 75. That would have been great. 76, 75, 74 would have been like a, $700-800 winner that you can afford to take the losses on the other two in full. But this run that we saw yesterday, we got out here around $7, which was a nice winner. And because it was early enough in the day, we closed out the other ones for a fractional risk or partial loss. And I just saw that, as we were closing and I was wrapping or just watching the trades and kind of see like, what is this trading for right now? Since we went up to like 85, 88, 89, it was wide enough that it offered up about $850 in profit. So about $500 some of profit would have been great. The other ones were partial losses at like $150 and another one for like $30 to $50. So you're up 560, maybe down about $200. You still make, $300-400 in the day. That's if you manage it, right? Now, it could have been a different story had this been a 20 wide. It would have been a lot more expensive. If I did 20 wide here, that would have been, much more of a, I'm trying to think. If you had up to $1,700 of profit and it settled at like $1,400, well, you can afford to take the 290 loss here, and you can afford to take the $2 loss down here, right? Because you're still going to walk away with like $1,000. So anyway, I'm just glad we managed to trade as we did. And also our line in the sand for daily profit play was 69.95, which was up here. And so price did not threaten it. So I took a partial profit when we started to retreat here. Took a debit down to 45 cents, and I had another contract that I let expire at 0. So 2 winners on those. One contract winner, one contract winner here. Did you exit those E-trades? Not sure what E-trades is. I exited the double up trades early. Yeah, I mean, those were talked about in session yesterday. We had that running live in session yesterday. Yep. Tasty and Thinkers. It's always off a little bit by a couple of points. Tasty trade showing 31.47, Thinkorswim 33.06. Typically, I see Thinkorswim is just a little bit higher on average. But, I mean, give or take. So let's do this. 31. So we'll go 31.50. And we're going to have a slight open to the upside this morning. Futures up about 0.18%. We poked some fresh highs in S&P. I had a chart alarm go off on Hang Seng last night for China. Let's get a rough calculation here. Let's say that we're going to be up about 0.17% on the open. So we'll open up about, I mean, 0.17 is no joke. We're pushing right back up towards these highs again. So if we open here at 69.90, we go, see if we open right around 90, and then plus or minus 31, 31.5. So go up 31.5. I still think that's really low for an FOMC day. But that would be the market maker move. And from the open here, go down 31.5. That would be the market maker move here. Okay, now, where does this get, like, where does this fail? Well, if the VIX ends up going higher today, then this bottom, this low, this measure move is likely going to be broken or threatened. It could still hold. I mean, the point is the day is it still an efficient day? But as far as market maker moves, we're going to open up a little bit higher, starting at all-time highs. We still have some cushion to stay in positive gamma. Everything from my GEX readings for the rest of the week. Let's go to these expirations here. So today is the 28th with FOMC. I mean, you see hardly any flows to the downside. It's almost like the market's like, what FOMC? Who cares? It doesn't seem like it's acknowledging there's any type of downside risk, which I don't love because that feels like the market is extremely complacent. So after these 0DT flows, let's say the price does in fact push up today. After 0DT flows, what's tomorrow? Well, it's still littered with a positive gamma to the upside. So, and now you're talking like 70, 50, 70, 60. I mean, look, on my bonus trades, if I am blown out to the top, like, screw, like, F me. I didn't think I'd be blown out through the top. But if that happens, okay. But hopefully, the market just has some type of response to like, hey, 7,000. We poke it and maybe it matters. And I mean, all I really need is if we're going to hang out around any level, let's hang out around 7,000 by Friday. If we do that, we've got a big fat profit trap. If we have a rejection in a fall, 69.50 sounds good to me. So I'll, accept the risk, and it is what it is, but we'll see what happens. Okay. This week's engineered options know that break-even level wasn't filled, but we have the 2 trades running to the end of the week. So if we knock out those winners, great. And then next week on Monday, we had a masterclass yesterday in engineered options. Next week, I will have another round of weekly trades plus a new set of monthly trades. So that will be good. And we'll just go right through the process. Now, I said this for all of my engineered option traders. I want to make sure that engineered options. Okay. I said if you're new to engineered options and you're fairly new to trading, we can keep this participation trade is going to be the most important. If you want skin in the game every single week, this is the trade to take. Okay. This is the one trade to take every week with good alignments. And it's one trade. So if you want to get in, place one trade a week, this is the trade you take. And we can do that Monday morning. So the notes yesterday, I'll see if I have them here still. So the notes yesterday, basically I walked through, this is where we're going to crawl for the simplest deployment in engineered options. And once you're ready for a little bit more, then we can take some baby steps. Then we can start walking, and then we can start jogging and running. So I just want to make sure that every trader in engineered options is comfortable with like the first trade. Once you get comfortable with the first trade, then we talk about our participation trade and our break-even trade. And then if we want to add more to that, there's some defense. But just to get in this class for full understanding, the simplest trade is one participation trade with good alignments every single week. Okay. That's all it takes. And that house edge, by the way, if we have proper alignments, you're looking at like a 65 to 70% win rate on this trade with a 1-to-1 return on risk, which you do the math on that. It's 1-to-1. You're winning 65, 70% of your trades. You're going to make money. Okay. If the alignments are mediocre, you still can take a chance at it. You're just going to decrease your win percentage to maybe like just over 60%, like 61, 63%. Okay. And even if it was, the historical house edge, which is 56%, 58%, still enough to make money. But alignments make a big difference. And right now, these alignments still, hold true. So that's just the simplest trade. Now, if I want to have the highest profit factor, if I want to have the ability for my trades to even participate week after week, and even if I lose a trade, I can still net profit on the week. That's where we have to take a step further in engineered options and not just go from the crawl trade, but go from the crawl trade to the walk trade. Okay. So I'm just trying to keep this where it's like little baby steps. We'll learn the process, but I want to make sure like it's just one trade. If I can wrap your head around one simple trade every single week for engineered options, that's all we have to do. And this week, like I said, I hesitated because it was FOMC, because we had earnings, because we're at the top. I mean, I overthought it. That's on me. But I'm really not, upset at the fact that, okay, I didn't participate this week because so far I haven't been filled. Do I still have a trade on pending to good till canceled? Yes, it's still there. Okay. But if the trade doesn't activate, that's fine. I still have 2 more winners to close up for profit. And that would give us 3 winners at 100% return in the last 2 weeks, which is fine. And then we have a fresh batch of trades for next week, which would be next week's trades. And I'll put in some bonuses for the monthly trades. Okay. So anyway, just wanted to address that. Like, it was a really good masterclass yesterday. If you didn't have a chance to check it out, I would say please watch that recording. Okay. But I'll get the notes updated as well. Okay. So we immediately open higher. FFIV, I think it is hit a take profit on pinch point. Let me check that really quickly. Pinch point. FFIV, trade number 74 to sit profit for 560. We'll take that. Trade number 74, 560 credit. Okay, that should be. So 560 minus $4. So a 35% winner. Grabbing a couple bucks. Okay, updating Telegram for pinch point. That is trade number 74. Trade pinch point. Trade management. Trade 74. FFIV. Very nice. It's my favorite thing about pinch point is just taking the trades and automatically seeing those profits get hit. Love that. So it's another winner. That is 85.7% winners. Not too shabby. Link for yesterday's masterclass. It should be posted in the classroom, Rick. Let me see if I can get the team to say that it's already in there. Let me see here. Let's go to engineered masterclass from yesterday. Okay, I'll save the notes. So full engineered options. We've been at this now for 4 masterclasses, 5 masterclasses. So all these notes, I'll save these and update them. So save as 16th, 17th, and 27th. I guess 20th and 27th class notes. That way, if you review any of the recordings, you can go through the notes with the videos with me because I type them as we go. Okay, let's do upload. Okay, so we have a company-wide meeting going on right now, and the one-click trading support team will throw that in probably 60 minutes or less. Cool. Yep, I'll get them up there, Alan. So we'll have the 116, 117, 120, and 127 notes updated. I'll just have it be one file, so it's not separate. We'll just do one big notepad. Yep, so it'll be out today. Good stuff. Okay, we are at 6997. Okay. So here's the dealio. Market maker move on the day. Daily profit play is a completely it's an optional trade today because FOMC is always difficult. It's typically volatile. I don't know if it's going to be a good nothing burger. Maybe FOMC is put on the back burner because it's a rate pause and everybody knows it. But Powell's comments, I don't know if they're going to matter. I mean, they should. They typically do. But we're going to find out. I mean, what is crazy to me right now is just looking at flows. It's like everything still points to upward flows. So, I mean, it'd be one thing is like, oh, it's one major sticking point. It's like, well, it's not. I mean, right now, 0DT shows this thing is still ripping higher. So, if anything, let me check. I mean, could we get a 69? I mean, if we're at 7,000, this is what kind of sucks. That was my biggest gamma level that's already been hit. We started there for the day. So, if I were to, let's say we put on like a bull put spread at 69.70, if price just does this all day, I'm not going to make a lot of money outside of a little bit of time decay, but time is way stickier with a day like today because all the volatility is coming at 2 p.m. Any type of direction we see today is going to be at 2 p.m. So whatever you do today for FOMC, be careful. If you're trading anything in the morning, just understand that there's some big volatility that's lined up later today. All right. Part of me wants to put on a bear call spread and just make this define risk. I could be totally wrong, but if we did a bear call spread, what is this? 90 cents. I'd be risking 410 to make 1. If we go there directionally, I don't know. I just don't think we need to force a trade today. Okay, here's what I want to do. VIX is at 16.5. Char alarms are set at 17 plus to see if the VIX is going up at all. Using a 16.5 VIX, let's calculate a top and a bottom. So 103 is the expected move. So we'll take our open. 103. It's around 70, 74. Wow. And that's a 16.5 VIX. And then we take the close yesterday and go to 103. There's a 69.06. Okay, if volatility goes up, you have to adjust that low. If volatility is nowhere today, then it's just a big vol crush. So let's see here. Plus minus 28. It's such a small number for what the market could do today. And again, this isn't like some trick that the markets are playing. It's like for some reason, volatility is low enough that this is what the calculation has given us. So it's like, are we about to see like this weird, low volume complacency for the end of the month, and then February things kind of open up a little bit? I mean, that could be a possibility. We have Meta, Microsoft, Tesla today after market. Rather than forcing a daily profit play trade today, if I look, I'll follow the mechanics here. If we did a 70-35 and we do a 69-30, like that trade is pretty decent delta. Like 10 delta, 10 delta. Do we blow this out? I mean, we're at basically 96. It'd be 60 points. That's doubling, right? Doubling the move here. I'll see if this gets filled for a buck. I don't mind throwing a trade on for the day. It's just I'm not going to settle for this credit. I want to see if I get filled for more credit. My dog might throw up. Yep. All right, give me 1 second. Hang on. Come on, buddy. Hey, let it out, dude. Let it out. Puke it up. Let it out. There you go. That's it. That's nothing. Hey, how about no more? All right, buddy, relax. Ugh. Oh, necessary. Come on. All right. First and last Frenchie, that's for sure. Great dog. Not a dog. All right. New all-time highs. Yep. 7,000 plus. Yeah, I'm going to put in. So here's the deal. If I put in this trade, I think if we put in this trade, here are my thoughts. Plus or minus on the day, 10 delta. Do we like double the move? Part of me thinks I want to do this today, that I need to do it with way less risk. Way less risk. So let me see. 10 delta. This is offering $1.30. I'm going to tighten this up. Go 10 delta for the start of the day. We barely moved off the opening price. $1 gets filled, but we probably get limited credit going into FOMC. If this fills for, $2 or $2.50, I don't mind, 1-to-1 and then playing some defense that hopefully is going to be pretty easy. So let me see here. I'm going to try for, gosh, this is, if I go $1, I got to play some defense. If I go $1.50 to $2, I give myself some wiggle room. I mean, let me just look at some levels here. So I've got 100% ATR up around 70.35. We have our 50% ATR around 60.50, 69.50. So I'd be below that. I'd be right around this level. All right, give me $2. This, and again, this is a trade that might not fill all the volatility. If we do have any today, it's going to be at 2 p.m. to 4 p.m. But I want to watch these levels. So I'm going to go $2 on this trade on a 5 wide, which is essentially saying that price would have to, make a run into this high, make a run into the low to get that trade filled. And of course, it, has to stay above it or stay below it, which if there's any type of efficiency today, it shouldn't be the case. So I'm going to go $2 on a 5 wide, which might not fill, but I'd feel better that way. At least that's an easy way to play some defense. I can throw some butterflies in, maybe sacrifice 50 cents to $1 and try to net a win out in the day. I'm going to try this trade here. So again, it's trading for 60 cents, but I want $2. So I'm not going to get the fill until price gets us any type of volatility. This is what we've seen a lot for FOMC, is we've seen days where the market does literally nothing until 2 p.m. and then it blows out some volatility, and maybe the market settles right here at the end of the day. Right? So, I mean, I'm kind of looking to see, can we get filled somewhere on that like volatility spike today, or does the market just, go higher? I don't know. Does it go lower? I don't know. That's the unknown with today. It's just really, it's a toss-up type trade. It's unnecessary amounts of volatility, but after today clears, a lot of times any indecision, watch for the flows afterwards. Is it a breakout higher or lower? Because we can measure that move. Measure this move, 50%, 100%, 50%, 100%. Like today's candle could be a easy measured move, like above or below. Okay. All right. So that trades in for $2. Let's see what happens. Let me post this in Telegram for members. Okay. So DPP, new trade, pending. It's FOMC day. In the past, this means high volatility potential. So today, I'm asking for more credit and staying with low deltas. So 128 expiration. That's 30 and 25. Levels, if price barely moves all day until FOMC, then post FOMC and press conference, does price test one of the spread levels to fill? Let's see. All right, it's posted. Silver nonstop. FOMC is a 2 o'clock beat. Yep. 2 o'clock will be the rate decision, which is likely going to be a pause. 2:30 is going to be the press conference. So, and look, there's not really a good way to trade this, okay? Because if you did an iron fly right now, the volatility, I promise you, the volatility is sticky enough. Look, I'll look at it right now just for fun. Okay. If we did a 7,000, 7,000, let's say we wanted to go 20 wide, 20 wide. Right now it says you can get this iron fly for $15.35. I'll write that down. 1535 iron fly. Okay. By the time we're done with our session today, is this improving at all? Because I feel like by the time we're done here at 10:30, 11 o'clock, this might be down to $15. So you sit on a trade for an hour and a half and you make $30 with a risk of 465. It's like it's a decent trade. It's just you need price to stay cooperative. You need price to stay very, very tight range wise, and just let time work its magic. But the unfortunate thing with FOMC is time is a lot stickier with a high volatility day like this, where all of the expected movement is going to happen at 2 p.m. So I don't think it's a day to force a trade. If I'm going to force a trade, it's at a level that I'm thinking, okay, I'll take $3 risk to make $2, and I'll also play some defense if I have to. So I'll make some, kind of on the fly decisions on whether or not I'm going to be protecting these trades. Okay. All right. So that's just more of a reference. Again, if I took the trade, it's already at, it's scrambling around here. There's 1530, 1540, 1520, 1550. I'm just going to assume I got filled at like 1535. I'm not in the trade. It's not a real trade. I'm just watching for my own, my own knowledge. That'd be an iron fly, which is you sell the center price and you buy your wings. And if price stays relatively calm, that should decay. So if I built this out right here, let's go SPX for today, 28th expiration. I will build out a iron butterfly, 7,000, 7,000, and I go 20 and 80. If we're trading this now at 9:50 in the morning, okay, so I want you to see, so price is at 7, I mean, it's right there. It's at, 7,000-ish. So the way you get paid on this trade is by time. So if price doesn't move, let's say this white line is center price, I want you to see when this starts to fill up. So as time passes, I mean, you'd have to hold this thing until, I mean, if we're in this thing at 2 o'clock today, right before FOMC, in theory, this trade could be worth a couple $100 right before FOMC. And maybe it is. Now, that's, of course, if you're still stuck within that like 10 to 15 point range. I mean, ideally, you want it to be stuck in like a 0 point range, but there might be a few $100 if you waited all the way. What we have found trading this stuff every day for the last couple of years, or, a year and a half, I guess, for daily profit play service, is every FOMC, you don't get this payment. You don't get this even time decay doesn't work the same way during FOMC. So what it looks like this. You've been sitting on this trade for 4 hours and you're up like $10. And prices cooperated where usually in 90 minutes you're out of your trade with, 30, 40, 50% profit. So that's the only thing. It's like you have to recognize that that's what FOMC days are, is all the volatility is 2 p.m. to 4 p.m. So it doesn't matter what trade you take, it's going to be more difficult to get the price to cooperate the way you want. I posted 70. I did, because that's the trade I'm taking. The trade I'm taking is 70 40, 70 45. Let me see what oh, you're right. Sorry. Thank you. 70 45. 40 45, 30 25. Correct. All right. Updated. So it's 5 wide. Thanks, Catherine. Yep. Thanks, Alan. I got it. It's updated. Okay. So 40 45, 30 25. Pending. Okay. Let's look at the expected move for Friday, by the way. Um, could I put a low risk defense trade in here? I don't know how expensive it's going to be if I did 40, 60, 20. So I mean, if we're going to go up to the top end of this expected move, I really, I mean, it's not an awful trade, but I don't want to waste 225 bucks either if I'm wrong. Maybe there's 15 wide, there's 15 wide. Maybe split the difference here, 45. So 15 wide, buck 45. All right. Let me see what I'm sacrificing here. So I have a $1.65 and a $1.95 in potential credit. Okay. And then I have another, I guess I'll look at total risk here. If I have 95 cents risk, 335 and 305, I'm risking 735. Do I want to add another $1.30 to that? Well, the $1.30 could potentially by Friday give me $1,300 of profit, which is enough to cover like literally everything. So could I make up for this trade if I'm right on a couple of those broken wing butterflies? Yes. If we're hanging out at 7,000, that's a profit trap. If we're hanging out at 6,950, that's a profit trap. I'm just looking to see like if I go 15 wide towards the end of this expected move, a dollar. I'd love this to be less than a dollar. I just don't know if it's gonna. I don't know if we're gonna get that. See if I can get this thing for a buck 40. All right, I should have asked for less, I guess. All right, so I'm gonna add to the saga of the bonus trades here. Let me put this in. I'll give a full bonus trade summary. Bonus trade summary. It's a broken wing and butterfly bonanza. All right, 130 expiration will be exciting at the very least. Here is the summary of trades I'm working with. So we have SPX, 130 expiration, 69.30, 69.40, and 69.55. That was for a $1.65 credit, which is a max risk of 3.35. This needs price to be 6,950 or lower for break even and profit trap. Okay. What was the other one that we did? Was it a 45 by 55 by 70? 130 expiration. Let me check that really quickly. One. $45, $55, $70. My memory was correct. All right, so buy the 6,945, 6,955, 6,970, $1.95 credit, max risk 305. This needs price to be 6,965 or lower for break even and profit trap. Then I have defense. SPX 130 expiration. I bought the 69.85 call. And I did it with, I want to make sure I did it with calls. I mean, calls or puts, it doesn't matter. It's going to be the same defense or all calls. Okay. This one is, let's see, 30, 45, and 60. So 30, 45, and 60. All right, 30, 45, and 60. These are all calls. 7,000. And buy the 70, 15. This is equidistant, so this isn't broken wing. This is just a standard butterfly. That trade is a 95-cent debit. Max risk 95. Max profit would be 1405. If pinned at 7,000. This needs to see price around 6,995 to 7,005 by end of week. That'd be a $500 bonus trap. 7,000 is up to $1,500. So if we're, plus or minus 5 points, it's still $1,000, which isn't too bad. Okay. And then SPX, I'm throwing in this one. I don't like this trade, but I feel like just in case we're going to, blow through and get to 70, 30, 70, 40, 70, 50, I'm going to have another cheap trade on here. I'm buying the, what I do, 45, 60, and 70, 30, 45, and 60. So 30. I did this with put so I don't overlap. Sell the 70, 45 and 70, 60 for $1.40 debit. Try to get that cheaper if you can. If anybody's taking that trade with me, try to get it cheaper. Does it fill at 135 debit? Does it fill at 130 debit? So max risk, $1.40. Max profit would be $13.60 if pinned at 70.45. This needs price to see, or this needs to see price. You got it backwards. This needs to see price around 70.40 to 70.50 by end of week. Okay. See if I can make this fun with a little bonus trade. That'll make one. There we go. All right. So here's a summary, and this is my public telegram. So here's the deal. There's risk. There's always risk in trading. All right. Now, what would be nice is if I land one of these as a profit trap. This has a $1,000 profit trap. This has a $1,000 profit trap. This has a $1,500 profit trap. This has a $1,500 profit trap. So the potential here is pretty decent. Okay. Now the risk, 335, 305, 95, and 140. I mean, my max risk on all four of these trades is not severe. I mean, 335, 305, 95, and 140. My max risk is 875. Now, let's say I win on one of these trades. Well, I win on one trade, slash that off the risk. Is it enough profit on one of these trades to offer up, a net winner on this? Hopefully, yes. Do I feel like I just overtraded? Yep, totally. But I also, if I am wrong, I'd rather give myself a fighting chance to mitigate as much risk as possible and maybe still carve out a winner. Okay. So regardless what happens, by Friday the 30th, it's at least going to, we got some skin in the game to figure out where things are at. If we're at 70.50, we got a fighting chance to make $1,000. If we're at 7,000, we have a fighting chance to make $1,500. If we're at 69.50 or lower, we got a fighting chance to make $350 to $1,000. Okay, I'll take my chances. If I am dead wrong and this thing is up to 70, 60 plus, 70, 60 or higher, then I guess I'm wrong. And I got blown out on the upside. I don't think that's going to happen. I didn't think 7,000 would happen, and we're about to see in the next 2 days, Wednesday, Thursday, Friday, wherever the dust settles. So, it's risk. I'm hoping we can land a winner, and I'm hoping we can land a net winner. I'm hoping we land a profit trap. It makes it fun. All right. But I'm just going to put in a little bit of defense just in case, and I'm using the expected move for Friday. Okay. So let's find out. All right. Any questions on that? And again, if you're not in these trades, there's no reason to chase these things, right? Because if you put this trade in right now, guess what? If you put this trade in right now, this one's trading for like $3 credit. It's a tiny risk, but it's a low probability trade. This one's probably trading for like $2.75 to $3 credit, something like that. It's showing like a low probability trade because what does price have to do in this? Price has to fall now 70 points. Price has to fall 50 points. Price can basically stay exactly where it is. Price can go higher. Some are looking for these to land a profit trap. Okay. If I build this thing out, you're going to see some overlaps. I mean, I can build this out in option strat. You're going to see something like this, a profit trap and another profit trap, and then a butterfly here, and then a butterfly here. So it's not perfect. It doesn't overlap where it's like, oh, I'm not guaranteed anything. I need price to be within this like 15-point window, 15-point window, 15, 30-point window, 15, 30-point window. I'm giving myself some chances by Friday to have some big profit potential. If there's a way to carve out net profit, great. Okay. Where this gets really easy is if we are less than 69.50, I have less to worry about. If we're less than 69.50, then tiny loss, and net profits. That's the easiest win because my biggest risk is on the broken wing butterflies. But a profit trap would be sweet, right? If we're at 69.50, that's not a profit trap, but it's going to be $200 plus 195, so I'll be up like $400 on that trade. That does cover the risk on both of those trades. Still make money. Okay, I posted them in Telegram. So if you're in my Telegram channel, this is my public Telegram here. I just posted them. I'll share the link. Chris Pulver, Telegram. There you go. So if you want to join it, there it is. Okay. And again, you don't have to force these trades. Let me be the guinea pig. I'll take the risk. We'll talk about it. But I'm giving myself a chance to see, well, based on what I've seen expected move wise, based on what I saw technically, based on a rising wedge, it's like I just took some calculated bets. If I'm wrong, I accept that. If I'm right, that's what I traded it for. Do I want to have 4 trades in here to try to survive the week? Not really. The goal was to take a broken wing butterfly and just let it be profitable. But price was stubborn and proceeded to go higher, and we've poked the highs. Now, like I said, if this is in any way, shape, or form a rising wedge, I've seen this happen with rising wedges a lot. The market will retest the rising wedge and then start to roll over. So my question is, does that happen by 1:30 or does it happen on February 2nd to February 6th? I admit that is a full risk because if I'm wrong on the timing, I can sit here and say like, oh, we should have. I mean, it doesn't matter. I put the trade in for 1:30 expiration. So if we're sitting here at the highs for the month, guess what? I'm hoping I have a profit trap to land me at least a defensive trade. Whether that's 7,000, whether that's 70, 40, 70, 50, just give me some profit. If we fall back down with, maybe a interesting comment and press conference from Powell today, maybe we have mediocre earnings from Mag 7, and then we have a government shutdown that happens on Friday or after Friday if there's not an immediate stopgap funding. And look, if the government avoids a shutdown and they fund it by 30 days, it's like, how much noise and drama that's going to be for 2026 to have every month like a government shutdown. Just add it to the mix of all this other crap we have to navigate. Okay. What other options service high positive return rate? Well, Rob, are you looking for like high reward to risk, or are you looking for high winners? Because high win rates would be daily profit play, waterfall income, project options edge. Okay. Highest win rates, daily profit play, 89.3% over 550 trades. Waterfall income, almost 95% over 130 trades. Project options edge, we're crossing, I believe we're at almost 100 trades, 97.3% winners. But we are taking on more risk than reward in those services. Okay. Pinch point, we're winning 85%, and we're usually winning 50%. Our take profits are automatically set 50%. That's the easiest one. Keep the high win rate. Newsbreakers, we win 71%. It's usually 1-to-1, 1.5-to-1. Engineered options, 70%, 1-to-1. I'm going to teach you, when I've got a 30-day bonus class, we're going to talk about how to get more than 1-to-1. But I said, like yesterday, it was like, I get there's a lot of traders that have come into engineered options that are brand new. I want to teach you the one trade you need. One trade for engineered options. That's all you have to do. We did the math on it yesterday. If all I did every single week was this, just hear me out. If we took a trade that gets us max risk of 250, max profit of 250, and we did that every single week, we've got $13,000, and let's say that we win 65% of our trades. Okay. We're still making $8,400 on one trade. One trade every week. That's all we have to do. How about that? So if you want to scale that, you're like, well, I'd like to make more money. Then you can risk more. Take one trade a week at $500, and now you're making 16 grand for the year. It is probably the most simple math that I can have in trading, which is why if I can teach you the process, it is a fantastic course to be a part of. And I think this is going to be one of the best ways for us to survive 2026 is just to participate in what the market is good at every single week, every single month, is find a way to grind, break even, or better. Okay. Double ups. This is, you see where it's positioned on this graph here. This would be we win about 60% of our trades. Okay. And that's because I typically take, like I did yesterday, I took 3 trades, won one of them, but the one winner was big enough to take full profit on the day. Okay. So my wins are typically like 150%, 200%. We've had 500+% winners, 300+% winners, 290. We've had a lot of winners. We've had a trade that was 1,100% in a single day. We were risking $75. It settled for $8.32. So you risk 75, you make $830 on the trade. That's awesome. But the hard part is to get that type of reward to risk. You're not going to get the highest win percentage. So if I'm winning 60% of those trades and my average winner is double, that's pretty awesome. Okay. And then crash insurance. Like I said, this one is for hedging only. This is like a 20 to 30 to 1. So the risk reward is off the charts in our favor. Like we're going for like 30 to 1 reward to risk, but the win rate is, you're going to win maybe 10% of these trades. So this is just this is to help kind of fight the nastiness that the market might give us. So for this year, what we have going on right now is I put on a VIX synthetic long, and then we have an SPX and an ES butterfly with a 20% trap. So a price is going to fall somewhere between 10, 15, 20%. We have like a 25 or 30 to 1 butterfly. And then synthetic long is if VIX spikes to 30, 35, 40, 45, whatever, why it would do that, I don't know. But if it does, there's nothing stopping our profit. So we're risking about $350 to maybe turn that into $3,000, $4,000, $5,000. So all that helps us do is kind of fight the drawdown that might come with any held positions if the market's not cooperating. Okay. Oh, David, look at you. Good fill, man. So 70, 30, 45, and 60 for 90 cents. That's great. Now understand that could be a throwaway trade, right? Like if we're not to 70, 50, that trade's pointless, but I'm putting it there just in case. I think right now it's like based on the expected move. If we're going to push up to like 70, 30, 70, 40, 70, 50, put a trap up there. It's low risk. I'm risking $1. I got filled for $1.40. Fill for $1.40. It trades up to $1,500. So again, like it's a big enough profit trap to cover all my risk and help me make a winner. Okay. Can you post the link where let's see here, the site used to look at trades broken? Oh, Option Strat. Is that what you're talking about? This one? Yep. Optionstrat.com. Option Strat. informational.com. I don't pay for this. Some people do. I don't pay for it. I've got enough stuff with my options data, gamma levels, affiliate stuff, fundamental analysis that this is more like just give me the quick, give me the quick like down and dirty of the trade. This is what it visually looks like. If you paid for this service, Option Strat, I don't have an affiliate link for it, but if you paid for the service, it's great. I know a lot of our other like Kane has his Option Strat, and when you pay for it, you have the chance of profit. You can play around with this. You can model your trades. You can edit the credits and debits and stuff. And like you want to go a little bit more in detail, that's fine. But I just like to show the visuals of it. This is one thing that really will kind of, if you want to nerd out on options, look at all these different strategies you can build. Now, I'm not saying you need to know and master all these trades. I'm a big believer that one trade mastery gets the job done. There's no reason to have to know everything. But I will say, if you know a strategy that you can go to when the market is bullish, trade that strategy. If you have a strategy you can go to when the market is bearish, trade that strategy. If you have a strategy that you can go to when the market is sideways, trade that strategy. So up, down, sideways, do you have a go-to strategy? Because if you do, you can be very effective in these markets. And all you're doing is taking calculated bets. Okay. All right. Good stuff. All right. So any services, right? I don't know. I think we'll have a stream today for Daily Profit Play. If anything sounds, interesting, you can always reach out to our team. Always reach out to our team. Support at prosperitypub.com, or you can call our team directly any day. The team's always standing by, 904-706-3537. Let me throw this in the chat right now just in case. So you can always inquire and ask and talk to our team about any of my services. Right? So I'll just do the quick rundown. We trade Daily Profit Play every day, right? We're essentially, planning on the market's efficiencies every single day. Waterfall income, we are swing trading the indexes every single week. Newsbreakers, we are evolving this around earnings. I have a trade on Netflix and Microsoft this week. I'm looking to price out a couple more if I can get something in Meta, and maybe Tesla today, maybe Apple. I'll see what those look like. I have a trade in on Starbucks as well. I took that yesterday with Nate. I didn't really make that a Newsbreakers service, but I can throw it in. It's still valid today. Double ups. This one is following 0 and 1 day gamma flows and looking on just trade. I pretty much trade SPX, SPY, QQQ only. I like trading SPX better, just because it's a cash settled, and when we're doing mostly it's butterfly spreads, and that way it gives us a high reward, low risk trade. So double ups. I mean, even though I don't win all the time, like if I win 60% of the trades, but my average winner can be anywhere between 150 to 500%. Risk is always managed. Like I had a rant on this yesterday in my engineered options masterclass. I don't think traders understand how important it is to manage risk. So if you always trade small, like literally always trade small, guess what? Risk is managed. And if all those small risks have the potential to give you 2-to-1, 3-to-1, 5-to-1, 10-to-1, all it takes is a couple of nice winners, and you're just stacking the gains in your favor, and your losses are always under control. Okay. Pinch point, that is a volatility-based scanner that I built that we get priced to go either direction. And I mean, a lot of these trades, we review the scanner, set the trades up. Once they're filled, set the take profit. And it's like almost like every week or so, I have one pinch point that we've taken. It's running. It's in the background running for like 45 to 90 days. Hits the take profit. Hits the take profit. Hits the take profit. It is one of my favorite surprises every single day that I get into the markets. Because my broker fills, I see the bells go off, and I look, and I'm like, oh yeah, pinch point trade, cool, nice winner. And everything's defined risk. So we're winning like 85% of our trades, and it's really like a set and forget it, and the markets just move. So it looks at prices that are like coiled and pinched. Essentially, they have to go somewhere, and that's an energy that we exploit in the market to make some good trades. Okay, crash insurance, like I said, that's for hedging. That is, I mean, it's a class is only $97. But it is something that is very important to me as a portfolio manager. Somebody that manages accounts, is managing risk is the most important thing. And so if the market is going to fall, let's say the market falls 10%. Well, if I have some crash insurance running and I can take a 10% market drop and reduce that drawdown to maybe 5% in my portfolio, that allows me to position
add more capital near these lows, and then by the time we get back to highs, right, this would be like an 11% recovery by the market, and I can be down 5% and also up 11%. And so I'm giving myself an edge every single time that I can fight the downside and offset it a little bit. And so these trades are, they're low probability winners, but when we get 20 to 1 or 30 to 1, last year I had a trade that was 44 to 1. It didn't win, but if it did, I mean, I had some clients that I told last year, it's like, look, even if the market fell to April lows of like, if we went to all-time highs, then fell back down to April lows in 2025, we had a 44 to 1 hedge. So, I mean, I would have offset most of that entire drawdown. And that's good because the market could fall 30% and I'd be down 0. It's not fun, but it's a necessary part of my trading. But again, that course is $97 because it doesn't have to be expensive, but it's an important lesson to know, every 6 months I want to have some hedges. Every 12 months I want to have some hedges. I might sacrifice maybe 1 to 3% of my total portfolio that can cover, 15, 20% ups and downs in the market. That's how good it's leveraged. But we can do that with options. Okay. And then Project Options Edge, my most discretionary service. I manage a lot of my accounts this way, but it does take a little bit more buying power. So a lot of times I'm doing ratio spreads, it's like a fancy naked put. I'm willing to own shares in this one and add covered calls and do some campaign trades. So I take advantage of having margin. I don't trade on margin, but I take advantage of having the extra buying power. And so, it's a lot of just consistent income trades. So, and last year, I mean, I think we had 70 some winners in the service. We only lost 2. We had like 97% of our trades were winners. So that was a nice little bump to my bottom line by just, some good income trades. Let's see here. The one trade mastery again. Yep. We can find that. Bill says, if you were only going to take one of the defense trades, would you recommend? Are you talking about those bonus trades, Bill? You talk about the bonus trades? Oh, okay, the bonus trades. So, well, I'm already in these, which are not defense trades. Honestly, right now, I feel like the defense trade that I think would be the best would be giving ourselves something around that 7,000 handle. I could see 7,000 being very sticky by the rest of the week. As far as probabilities go, I mean, we're at 7,000. Can we hit it again? Right? I think that would be like the sticky defense trade. Because it's a round number. If the markets are like, hey, we're going to celebrate by finishing the month positive and staying at 7,000. I mean, right now we're trading at 69.87. So a little bit of volatility, some earnings. 7,000 seems like a pretty decent round number for markets to kind of gravitate towards. Let me get one more look at it. Let's go to Friday and see what the biggest gamma level is. So we have 69.50. These are my biggest gamma levels. We have 69.50. We have 7,000. And we have 70.50. So, I mean, if I've got to make an educated guess, it's like, well, 7,000 is a round number. 70.50 requires some pretty decent flows to the upside. I mean, we can get there based on the expected move, but that's going to be like a 20 delta. Okay. So a 7,000 to me, it's like, I just think between maybe a 7,000, 70.10 area, that's enough forgiveness to be like, well, if we're up a little bit higher, hanging out at that sticky round number at 7,000, that could be like a good defense trade. I don't know if it's going to be as cheap as when we took it, though. If you did a defense trade for the end of the month, okay, let's say that I did let's flip this around. If I did a 7,000, let me do a butterfly spread here. So if I went 20 wide, I mean, that's not a bad defense trade. I know I only paid 95 cents for mine, but I was only 15 wide. This is $1.85, $1.90, maybe $2, and it's 20 wide. So if I need a defense, I'm covered up to about 70, 70.18. So as long as price is less than, you get a yellow line here. So if we're less than 70.18, we've got profit trap. If we're greater than 69.82, we've got profit trap. So this is risk, profit trap. Oops, I didn't draw that right. So we'd have risk, profit trap, risk. So it would, you're paying 190 to make up to $2,000. So you walk away with $1,800. That covers a broken wing butterfly. Okay. But acknowledge that if we go higher than these levels, right? If we go higher than 70-20, then this is the upper side of that expected move. Now, I don't like to necessarily expect price to finish at the expected move. I could see price getting there, but not staying there. Does that make sense? So, gun to my head, I think a 7,000 focused defense trade could be pretty good by the end of the week. Okay, Patrick, you let the bonus trades expire. I'll be managing those trades on Friday. It might be best just to let them expire because all those trades are going to be maxed out for profit potential on Friday at the close. So my goal is going to be reviewing my positions. So build a trade. That was a bonus one. There's a bonus one for defense. There's a bonus one. So, I mean, my job is to monitor this stuff and see, like, at the end of let's just say, like, the final bits on Friday, how are these trades doing? Do I have any that are in like a big fat profit? If they are, does it cover the risk of all the other ones? Am I making money as a net result? If I'm making money as a net result, then I might take it all off the table and close it down for the win. Okay. I mean, I like knowing that I have the money in my pocket so I can close it versus let's wait till the end of the day to have this in cash settle. Because if it cash settles, it has to be at 40 for my profit trap. It has to be at 7,000 for my profit trap. It has to be at 70-20 for my profit trap, at 70-45 for my prop. It has to be at those numbers or at 69-55 for my profit trap. So that's very difficult to do. It's very difficult at the end of the day at expiration to be exactly at your pin price. But it can be close. And if I've got some, big profits, then maybe we've got enough to cover everything. Okay. You have two bonus trades overlapping. How does that work? I don't have any overlaps. I've got broken wing butterfly here. Let me draw this out on the chart. Here, this will look like a freaking mess, but I'll build it out. All right, I'm going to build out all of the bonus trades. Okay, so we're going to do a bunch of flies here. So I'll go. This would be the. We did this in calls. So I did the 30 by 40 by 55. That's a broken wing. So 10 wide, 15 wide. And then I add the 45. So 45 call. And a 55 call. And a 70 call. That's another broken wing butterfly. Then we have our trap, which is 15 wide, which is I think I did this with calls as well. Those are all calls here. Bonus defense are all, where the heck did they go? Defense trade are all calls, okay? So then a buy call at 85. Sell call at 7,000. And 70-15. There's a trap. And then the one that we just put on is the, 30, 45, and 60. 30, 45, and 60. Those are all puts. So I bought the 30. Selling the 45. And the 60. Okay. So this is the ugly trade that I have. Right? Now, I have what's nice about this trade is there's no risk to the downside. That's what's so dumb. It's like I know that if price just gets below 69.50, I'm going to be a lot happier trader because that's where most of the profit is. Minimum risk, but all the profit would be 69.50 or lower. because I'd have a break even and then I'd have a profit trap. Like that'd be great. The broken wing butterflies would be great if we're below 69.50. Okay. A profit trap is also nice if I have some type of overlap. That's doable. I mean, I suppose if price is, this is what's interesting. If price is at 69.40, okay, at 69.40, even 69.45, I can actually double dip on those broken wing butterfly profit traps. I mean, that makes things pretty exciting. So if we're at like 45 or 40, I have some profit trap optimization, and then I have no downside risk. So that would be great. The other ones are just if this is dead wrong, then I have to defend those trades, and that's my 7,000 pin, and there's my 70.45 pin. So do I have a weakness spot? Yeah. If we're above, 80, if we're above 80, so between, this would be, oh, these are, wait, hang on. I need to, this is way tighter. My bad. This is 69.55. 69.55 and 70. I was like, man, I really had a big dead zone, didn't I? 55 and 70. And then this would be the buying at 45. Okay. And then we have the 30. So 69.30, 69.40 by 55. There we go. Okay. So now the dead zones are a little bit tighter. So from 65 to about 90, 69, 65 to 90, I do have a dead zone. And that would cost me, like I added up this morning, my max risk around $800. So I'm in trouble. If we're at, 69.65 to 69.90, I'm in trouble. I accept that risk, right? 4 trades and I lose everything. Okay, I'm losing $800. I can make that back in a couple of trades, no problem. But I don't want to lose. And if we're somehow in here because of our traps, it's like, okay, that trap is from 69.90 to 70.10. It should be, and by the way, this trade is cheaper. This trade should be a little bit wider. So because we only paid 95 cents for it, it's going to be like 86 to 14. So this one's going to be a little bit wider. And then this one, because we took it today, is probably accurate. That was $1. I paid $1.40 for it. If you paid 90 cents for it, somebody posted they paid 90 cents for it. That gets you a little bit wider butterfly profit trap. Okay, so do I have some weakness? Yep, I've got some weakness in here and in here. If we're dead wrong and price is above 70.55, well, fudge, man. I'm out. Or I guess above 70.60. I'm out. Like that's max risk. But again, it's risk defined. So what makes this trade really easy? Like I said before, 69.50 or less would be great. Ideally, a 69.45, 69.40 would give me a chance to tap into a couple of profit traps on the broken wing butterflies, and I can just sacrifice the defense trades. So I'm going to save this because this is a kind of a crazy look to all these bonus trades. But let me save. Oh, don't go back. Ah, dang it. I should have just clicked on the save. Crap. All right, I'll build it again. Anyway, I'll try to save the trade just for illustration purposes, but that's what it looks like. It's ugly. It's a lot of trading, but it's max risk at 800 some bucks. And hopefully we walk away with some dollars. Okay. You're putting a buy and a sell. Right, but they're not the same. Like one's a put, one's a call, right? They don't overlap. Nothing should overlap on this trade. There's no overlaps. There's no overlaps. There's no overlaps. There's no overlaps. Oh, I see what you're saying. Yeah, so it was a different account. The 30, 40, 30, 40, and 55 versus the 45, 50, and 70. Those are 2 different accounts. Yep. So the 85, 7,000, 70, 15 looks around $1. Yeah, that's good. I paid 95 cents for it. So I think, risking $1 to make, $1,400 is a pretty good trade-off if it's going to stick around that 7,000. I mean, like I said, even if I was willing to pay like $1.80, you could go 20 wide on that trade. So 69.80, 7,000, 70.20. If that's only $1.80 for an extra, what, 80 cents, you're getting another $500 of profit potential. I mean, I think that's also a reasonable trade-off. But yeah, I mean, $1 is great. Okay. So at the very least, Friday is going to be something to pay attention to. If you have some skin in the game, which I do, some of you have it with me, we'll figure it out. Do I need to micromanage these trades? Not really, because all of the profit trap happens on Friday. So when will we know how to manage these trades? Honestly, probably by Friday at 2 p.m. Friday 2 p.m., Friday 2:30 p.m., Friday 3 p.m. So when you want to start looking at these. That's when all the magic happens. And that final 60 minutes of these trades, all those butterfly traps, those profit traps start to fill up. Okay. So I will plan on this on Friday. It's been difficult to like go live every single day on YouTube like I did in the past. So I'm doing more video stuff now on my YouTube channel. But we will I'll officially do like a live session on Friday. So you can join my YouTube channel. It's youtube.com/Chris Pulver. I'll throw it in Telegram. You just come join me if you want to, and we'll walk through that final hour and see where things are stacking up for the day. Okay, Gloria says the original January 30 trade, I rolled 55.70 spread to not. So you rolled it up. Interesting. Did you roll that for a credit, Gloria? Did you roll it for a debit? I feel like if you roll that up, interesting. So you rolled a, hang on a second. Did you just take a credit spread, by the way? Did you do a 15 wide credit spread? Hang on a second. Let me make sure my math is correct. 55 to 70 is 15 wide. 95 to 20 is 25 wide. So is that why you got a credit? Because you went wider? So 69.55. Gotcha. So you went 15 wide, rolled it to 25 wide. Okay. So you got credit, but you're also taking on an extra $1,000 risk. And at the end of the day, when did you roll it? Did you keep it to the same expiration? That's probably my only concern. If you kept the same expiration Jan 30, I feel like this market might just cling to the highs by the end of the month. Okay. All right. Well, skin in the game. Let's see what happens. I mean, part of me would love like if you could roll it, if you want to roll it wider for a bit more risk, to roll it out like a week and see if that, and maybe that didn't pay you a credit either. It's always tricky to roll spreads. Like if you just roll like a 2-leg spread, it's pretty tricky. So the fact you got a credit was good, but you got that 25-cent credit, or you got whatever credit it was, but you're taking on $1,000 of extra risk. Okay. So hopefully you need price to stay below 69.95. Hopefully that's a working trade and a winning trade for you. So my fingers are crossed for you for that win. So, let's spend some time together on Friday and figure out where we're at. Yep. Alan has said that's two different accounts. So my overlap at 69.55, that's two different accounts. That's why I have those trades. Yep. All right. Good stuff. Okay. What else can we chat about today? Yeah, we're cheering for you. And, look, we want everyone to take a winner on Friday. Wherever the dust settles, obviously I want to win my trades. I don't like losing. But if I know that if I had to lose all 4 trades and be dead wrong, then okay, I'm down $800. Give me a week of daily profit play, I can make that up. Give me, a month of waterfall income. Give me 3 weeks of engineered options, I can make that up. It's just trading, But if we land a profit trap, if we land a winner on Friday, then great. Then we walk away with, we have one big winner maybe, and it walks away with, maybe $200 to $500 net profit. After taking 4 trades, we lose 3, win 1, and we have, maybe 200 to $500 to show for it. Net. Max profit on that one, Tony, that would be a 55. Right? 55 is your pin price. So if you have the 45 by 55, max profit is going to be at 55 at expiration. That's going to be a $1,000 trap on top of the credit that you pulled in. So that trade would be up to like $1,200. Yep. Yep. No problem. Okay. Good stuff. All right. What else we got going on today? We'll have a daily profit play session here in just a moment. I've got a couple of bonus classes as well. So tomorrow, daily profit play. I know I had some new members join me this week for daily profit play. I will have one more session. So Blake will play a session for us in just a few minutes here. But masterclass. So DPP for daily profit play. Masterclass Thursday, 1 p.m. Eastern time. Okay, we finished our engineered options masterclass yesterday. That will be posted today with new notes. And then on Friday, we'll do 3 p.m. Eastern time. This will be, I call it the final hour. That'll be in my YouTube channel. Okay, so I'll go live there. I'll post that link in Telegram just because we want to talk about all these bonus trades. Bonus trades. And what are our results? Bonus trade results. We'll take that into the close. Daily profit play. All members. So core strategy discussion. Obviously we'll see what happens today. FOMC is, in typical fashion, it's very quiet. We're an hour and 8 minutes into trading, and the market's moved, 8 points. But if you're in a standard daily profit play, you're not seeing any profit. I've got to ask, I know of, 250, 300 people that come into this session. How many of you are in? Is anybody in right now a standard daily profit play? And if so, what are your strikes? Where'd you get filled? And are you seeing profit right now, 60 minutes into the session? Because price is pretty centered, but we've seen this before where it just remains very, very sticky all day. Doug, yes, there is package deal to get all the services. Yep, of course. If you wanted to be a Diamond Club member, that's Diamond Club's like all access. Yeah, you can talk to our team and they can walk you through what that looks like. There's actually a conference in 2 weeks. I'll be in Jacksonville for a VIP Diamond Club conference in our Prosperity Pro headquarters. I'll be there for 2 days and presenting in person. We're gonna have like 50 people on site, and I think we're gonna have like 300 plus people online. So if you're wanting to become a all access member, like that should open up if you want to come see us in person, then come see us February 9th and 10th. If you want to hang out online, you have access to that as a Diamond Club member. Yep. Yeah. Thanks, Blake. Larry did a 75. So is that 67.50? Oh, you did 50 by 30 bull put spread for $1.20, no profit. Got it. Yeah. And I just thought it's like if you did a bull put spread and price doesn't go up, you're not going to get paid. Yeah, I see. So you did 15 wide. Got it. Okay. So you're 15 wide, pulled in $1.20, no profit yet. Yeah, price hasn't gone up, so you're not going to get that decay. When you started the trading here, price is down a little bit. I mean, granted, you're probably in a good spot for that trade as far as staying above the positive gamma. Maybe filling the gap today and going back up. But honestly, here's what's going to happen: if price goes up, Larry, and it happens at like 2:00, if price goes up at 2:00, you're going to see that trade probably pay you within 5 to 10 minutes. If price is down here, you're going to be taking on heat all day, and you're going to want to see a bump and a jump at the end of the day. I mean, you know what the deal is. It's just to take that bull put spread, you need a price to go up. And since we started at 7,000, I was like, well, I don't know. Maybe that actually does matter. Maybe it does stick. So we'll see. So, all right. Keep an eye on that. I'll put one more thing here. Oops. All access would be request only. So you can contact your team. Trade mastery. If anybody wants that one trade mastery, here is the video link. There's the video link. That's just direct play link if you want it. Brett says, did 5 wide, 35 by 40. You got it for 95 cents. It's currently trading for 70. Okay. So you're actually in profit on that. That's good. Bryce is sitting on the hands, and that's fine. Just loin. See, bonus trades posted, still good. Well, David, I mean, I'm talking to David Rice, David R. That trade is good, but it's not a high probability. The reason you're getting 310 credit, you'd be risking $1.90 to get 310 credit, is because you're trading it, 30 points in the money. So, I mean, the probability is maybe 35, 40% that you win that trade, but the trade-off is you have higher reward, lower risk. So do I love that trade right now? I mean, I love the low risk, but it's just, like I said, if you're not in the trade, I wouldn't take the bonus trades now. Despite the higher credit, you're just taking a lower probability trade. But, it's still a trade. I think if the market disappoints in any way, shape, or form, we dropped to 69.50 fast. We dropped to 6,900 fast. Who knows? It's been weird to see the market inching all week long at all-time highs. Meanwhile, we've got gold surging, we got silver surging, we've got the Japanese yen bond yields going nuts, and the dollar's dropping, for 3 straight days. It's kind of weird. And volatility is like, 15.7 to 16.7. That just doesn't seem like a realistic volatility measure. So I could see, and again, it might not happen until February, right? Like that's what's so tricky. It's like, I have no idea when this stuff takes off. But if I'm wrong and my timing of the 30th is wrong, I will probably venture to say that in February, I'd be right. But that's not fair to say. That's like Michael Jordan said, I didn't lose games, I just ran out of time. Well, that's what I had here. It's like, I'm probably not going to be wrong. Like I could see Price doing something like this. I could see Price pulling back. But if I did it on the 30th and it didn't do anything that I needed to do directionally by the 30th, then I'm wrong. I still accept that risk. So anyway. Bill says, I don't understand how the same trade with a higher credit, different result. Not sure what that question means, Bill. So what David is saying is the same trade that I took. So if you look at the 6945 buy call and then the 6955 sell call, and you look at the 6970 buy call, okay, I took the trade for $1.95 credit. So that's my trade. Now, with SPX at 6981, and only we'd have 012, we'd have 2 days of expiration. That trade is showing $3 credit, right? Because what do you need to have happen? I took the trade when we were trading at like 68.50, 68.60. I was out of the money on this trade, which is why I only got $1.95. So now that you're in the money, the broker says, well, that trader can have more credit because what needs to happen is price has to fall. Well, the odds of price falling is certainly not in your favor, right? Like this market likes to say higher. So yeah, I mean, the market to fall is going to be difficult. So what David would be rewarded on is if he says, I think this is a good trade, $3 credit means I pull in $3, I'm risking $2, and I also have $1,000 profit trap. So here's my $3, here's my profit trap for 1,000, there's my $2 max risk. Okay. But guess what? This would be the 69.55. And this is a broken wing butterfly call spread. And price is up here at 69.80. Right? I'm doing a call spread. I'm doing a butterfly broken wing call spread, which means I'm calling the top. So the reason he's getting more credit is because this price has to fall in order to get back into that profit trap. That's why he's getting more credit. When I took the trade, price was down here and price could go up into my profit trap. Well, now it's gone through it. So now this trade is offering more credit because it's requiring price to fall. That's the trade-off. Make sense? Could you go back to the screen showing the Friday session on waterfall income? I don't have a Friday session on waterfall income. I'm doing a daily profit play. So here's the weekly teaching. So I did a engineered options yesterday. So that class will be posted with notes. So this is done. We'll have a daily profit play Thursday, 1 p.m. Eastern time. And then I'll have a Friday final hour. It's going to be on my YouTube session. So youtube.com/Chris Pulver. This will be 3 p.m. Eastern time. That's what happens. So I'm going to teach daily profit play tomorrow at 1. I'll do a final hour session on YouTube at 3 p.m. Friday so we can walk through the final hour together. Reason why is I want to see where these bonus trades stack up. The more credit, the better. I mean, yeah, the more credit, the better for less risk. But remember, you're only getting more credit because the probability profit is lower. Everything we do in options, there is a trade-off. If you want more credit, less risk, it's typically lower probability. If you want less credit, slightly higher risk, it's probably higher probability. That's the scale. That's why I love options. It's fair. You know, if I need price to drop, if I need price to fall to 69.50, the broker is going to give me more credit for that, which means I take on less risk. But the probability of it dropping 30, 40 points is low, right? The market doesn't like to fall. So it's going to tell you, like, sure, take the trade for $3, risk $2. But what does it require price to do? A price has to fall. So if price doesn't fall, you're still risking $2. But it's less than what you can make. So it's not a terrible trade. It's just you need price to be at a certain level. And in this case, price would have to fall. Okay. So does that help, Bill? Does that make sense? All right. Sounds good. Okay, let's do this. Let's kind of wrap up here. So I will be live today. I'll add another little wrinkle to this. Today. So today, 1 p.m. Eastern time. I'll be on YouTube for FOMC. Okay. And then at 3:30, I'll be on Closing Playbook with Nate. That'll be our build a trade. So if you want to come back and join me for anything this afternoon, I'll be live at 1 o'clock on my YouTube channel, and I'll be live with Nate and the team in Closing Playbook for build a trade. We'll see what we have for some earnings. We've got some earnings today. Meta, Microsoft, Tesla coming after market. Apple tomorrow after market. We'll see what those look like. Okay. Blake has a daily profit play. I'd love to see some more members join me tomorrow. We have a masterclass Thursday, 1 p.m. Eastern time. All new members, all OG members, come back for a little refresher. All new members come in for the core strategy. We are 92% winners for the month of January so far. I mean, I think we're 12 for 13 for the month. We didn't even trade the first week. We had a holiday with Martin Luther King Day, so I mean, it's decent. 12 out of 13 with maybe 10 to 14 trading days or something like that. So anyway, good stuff. But Blake's got it fired up. Any special FOMC class plan? I mean, yeah, that's what my 1 o'clock session is. So if you want to come to my YouTube channel at 1 o'clock, I'll be live at 1, kind of getting things prepped, watching to see where price is at, talking FOMC, look at the CME watch tool, maybe the options market's showing any type of volatility, maybe the VIX is somewhere else. But yeah, come get that kind of prep work if you want at 1 o'clock. And then if you want to join me, I'll be live at 1 p.m. and 2 p.m. Just walking through FOMC all day. Okay. David says, should I go skiing or stay for FOMC? I mean, if you have a trade on, you probably want to stick around for FOMC. If you don't have a trade on, go enjoy the slopes. So, all right, Blake, you're muted. Yeah, let's fire this bad boy up, and I'll see everyone this afternoon. And if you want to join me for a class tomorrow, Daily Prop Play, let's see some new members in the class.
Sounds good to me, Chris.
All right. Thanks.
Thank you.
All right. So quick reminder, we're